All right, so for Silver Bullet, we have two specific kill zones that I'm looking at during our New York session, okay? So the first one is from 10 to 11 Eastern. Okay, so what I'm going to do is I'm going to grab this little date range thing tool right here, and I'm going to go find 10 a.m. Okay, so 10 a.m. on Thursday, and we're going to go all the way to 11. Okay, so right here, this whole area, that's our Silver Bullet right here, Silver Bullet kill zone. Okay, our next one is from 2 to 3 Eastern, 2 to 3 p.m. Eastern. Okay, so that would be all the way over here. All right, so 2 to 3. So we see 3 o'clock right there, 2 o'clock right there. Okay, so that would be our next one, and that's another reason why I like doing our prop firm session at 10:30, leading up into that ICT kill zone there. Okay, so what are we looking for with Silver Bullet? It's pretty simple, guys. It's pretty simple. You're looking for what our draw on liquidity is, okay? So in order to figure out what our draw on liquidity is, you have to find your highs and lows, and you have to understand market structure and what our daily bias is. Okay, so today, like I said this morning, our daily bias today was long, right? I did say that this morning when I first hopped on. Our overall bias was in the longs. I want to see us go grab yesterday's high. Okay, so what does that mean? That means after market open, when we come into this 10 a.m. to 11 a.m. Eastern, we're looking for price to go attack that draw on liquidity. Okay, so we have to have that liquidity formed already previous to our that ICT kill zone, previous to this time. So where do we have liquidity? Well, on the buy side, we have it up here, okay, right there, and we have it up here, okay. So those are kind of the liquidity levels that I would be looking at for our Silver Bullet. So there's one of two things that could happen. Either price will just push up and grab that liquidity, and not come back down, or we'll target some sell side first, right, kind of leading into that Silver Bullet, or in the Silver Bullet. And when you guys hear me say buy side and sell side, so our liquidity that's resting above at the highs is called buy side liquidity, and our liquidity that's resting below at the lows is called sell side. So when you hear me say buy side, sell side, that's what I mean by that. Okay, so we had sell side liquidity resting down here at this low. Look at that low. All right, so what does price do? What does price do at market open? It drops. All right, so we have market open right here at 9:30. Price comes down and it targets our sell side liquidity. Look how we come down, we trade below, and we grab that. Okay, but then what do we start doing as we start moving into our Silver Bullet kill zone? We start pumping, Okay, so now I'm starting to think, right, this is when I was kind of in the middle, where I'm like, my bias overall is still in the longs, but right now with this structure, we do look kind of bearish. So what we can wait for is for price to come back down, create sell side, right? So like right here, you can see we pump, dump, pump, and then we create the sell side liquidity, okay? So when we create the sell side liquidity right here, if price takes that and then starts pumping, now that's when that Silver Bullet is activated. So now we're going to target our sell side liquidity within this hour, right? And look how what we do is we come down, we grab our sell side liquidity, pump up, come down one more time, pump up, right? And we grab that buy side liquidity, right? So that was our Silver Bullet liquidity level resting up top, right? Because we formed it before Silver Bullet hour. We have an overall bullish bias on the day, so we want to see longs come in. So now we're just waiting for price to kind of come down. We come grab sell side liquidity at market open, come back down again, grab some more sell side, and then we pump and grab that buy side. So with Silver Bullet, you're really just trying to find where is our draw on liquidity. Okay, so if you see me ever say DOL, that stands for draw on liquidity, right? So if we were to have, I didn't do this pre-market. I wasn't really even thinking about silver bullet, to be honest with you. And sometimes there's certain like entry models and stuff I won't even be thinking about because I'm thinking about so many other things. But in hindsight, looking back at this, like our silver bullet played out perfectly, right? So now I'm kind of looking back on it and okay, yeah, if I would have seen this right away, then it would have been perfect, right? But we still caught the longs in this trade and we still had our buy side. I just didn't say it specifically as silver bullet. Okay, but we were in that silver bullet hour. We had our previous buy side liquidity resting up top. We trade down, we grab sell side, and then we pump up and grab that buy side. So that's our typical silver bullet setup. It doesn't always have to be the high of the day. It does not have to be the high of the day. It could be any buy side liquidity that we see that was formed before silver bullet hour, right? Like this one here and this one here, right? So obviously it is the high of the day, but that's just kind of how it worked out. It does not have to be the high of the day. You just want it to align with your daily bias, and you want it to align with where you just want to figure out what is our draw. If price is going to go up, what's that draw? And why are we doing that, right? But what we see and why silver bullet can be a very successful strategy to use is because in these time zones we see it happen all the time. Okay, it's not going to happen every single day, but we see it happen all of the time, right? Where we see price come down, grab some sell side, and then pump for our buy side. And it doesn't always have to grab that buy side, like I said. Even if we came down to here and just bounced from this level without taking that sell side level, that would still be considered a silver bullet setup. We don't always have to grab opposing liquidity. Okay, we don't always have to grab that. So yeah, that's kind of that silver bullet idea. And let's say today we expected price to be bearish. Then it would have been flipped, right? Where this low right here would have been that target for our, these lows would have been that target for our silver bullet, right? This one and this one. And let's say we pumped up market open and we grabbed our buy side, right? Then I would have expected price to come all the way down for that silver bullet, once we hit that 10 o'clock time. Okay, so that's kind of what I'm looking for. So basically, to sum it up, I know I've said this a lot, but I just want you guys to really understand this concept. So you're looking for what is our draw on liquidity. Does that draw on liquidity align with our daily bias, right? Because how do you know it's a draw on liquidity if it doesn't align with our daily bias, right? So you want it to align with your daily bias. You either want to see price move in the opposite direction previous to that move, or you want to see price go grab liquidity on the opposing side before that move. Okay, after that happens, then now you're waiting for price to reverse and you're waiting for an entry off fair value gaps, off of order blocks. Okay, so now we're going to talk about those entries. Where could you enter off of, right? So I obviously today waited for us to start getting that strong push through these highs, right? And I think we got our first entry right around here. But what did I wait for? I didn't wait for a break of structure because I saw that our draw on liquidity was up here and I saw that we were going to get that bullish push. So all I waited for, and I'm pretty sure this was our entry, correct me if I'm wrong, I'm pretty sure we had an entry right around here, but we formed a 1 minute order block here, and even on the let's look at the 5 minute time frame. Let's look at the 5 minute time frame. Yeah, so on the 5 minute there wasn't too much, but on the 1 minute is what I took that entry. But again, another entry, I know we already took that sell side liquidity, but another entry could have been this 5 minute order block forming. I think we took this entry as well, actually. Price trades back into it and then we pump again, right? But typically on silver bullet, I'm kind of looking for those 1 minute entries, and I'm looking for those 1 minute fair value gaps and order blocks that are forming, right? So I saw this order block form, I saw we started to get momentum, we get in that trade, and then right here we form an order block, we trade into the fair value gap below, we pump, right? That's another entry right there. Okay, we retrace back down into this fair value gap, we pump, right? That's another entry right there, and so forth. Okay, so you're kind of just looking for those breakaway fair value gaps and order blocks as entries, because you can see we don't get a ton of retracement in the market during our silver bullet. We kind of saw that expansion move pretty quick, so you kind of have to look for those entries that are just those small 1 minute order blocks and those 1 minute fair value gaps that are left behind. And that's when you see me getting more aggressive, is because I'm not going to wait for price to retrace all the way back down to here. No, once I see that breakout, I'm waiting for that first retracement right into that fair value gap, and I'm getting in, okay? And then yeah, once we take out the liquidity, you know, you're not necessarily looking to keep trading those longs, but if the daily bias, if there's still more liquidity to be grabbed up top, you know, like maybe these highs or so forth, and that daily bias is still very bullish, you can still look for those setups, okay? But you can see after we grabbed our liquidity, we have this reversal pattern, and then we retrace all the way back down to our discount, and now we're pumping all the way back up to grab that buy side again. So look, going into our next silver bullet hour, where's our draw on liquidity now? Well, now it's up at these highs. Okay, so that would be that silver bullet liquidity that I would be looking to target for our next silver bullet hour, right? And like I said, it's not going to happen every single silver bullet kill zone, but we do see it happen pretty often, especially with our strong bullish bias today. Right? If we set up a trade to where we don't go take this out before this time, that's what I'm going to be looking for in terms of my silver bullet trade, right? So I'm going to be looking for price to either come back down and grab some sell side and then pump, or just kind of, you know, move, you know, maybe we kind of do something like this where we just see price kind of come up, down, you know, a little bit of movement like that, and then we see that expansion, you know, up to that silver bullet, right? Something like along those lines where we're just kind of waiting. Once we get into that silver bullet hour, now we're looking for that either a liquidity grab below and then expansion, or we're just waiting for that first breakout move and pull back into a fair value gap or order block, and we're looking to take that long. Okay, so that's kind of what I'm looking for when it comes to silver bullet. So yeah, that's what I got for you there. Hope you kind of have a good understanding of that. But now I'll leave it up, you know, open to questions, comments. You know, if you guys have anything for me, let me know. If you have any specific questions about it, any comments, feel free to ask. Feel free to ask. Yes, it is recorded. I will upload this right after. I'll upload this right after. It takes a few minutes to upload onto my YouTube, but then I always post it into live recording, so you'll see it there. But yeah, any more questions, any more comments from you guys? Yeah, that's super important in terms of which liquidity levels to focus on, right? So that's why I always talk about what's our draw, right? What's our draw on liquidity? And I always want it to align with my daily bias, okay? So there's going to be our internal and there's going to be our external. So our draw just means where does price want to target, okay? Where is that next level that price is probably going to go take out? Okay, so that draw on liquidity earlier was these highs right here, right? That was our draw on liquidity. Right, because if it aligns, if I think price is going to be bullish, I need to have a reasoning for price to be bullish, right? So that's why I look from a weekly and a daily time frame all the way down, because if on a daily time frame I think we're going to be bullish, now I can look at those levels of liquidity that I think we're going to go target next, right? Because if we have bullish structure, I'm now looking for us to go take out our buy side liquidity, and you can see those by our swing highs and swing lows, right? Swing high up here, swing high up here, right? So we're going to target those swing highs and our strong levels of liquidity, you know, whether they're internal or external. Talks about previous PM session high low, London high low. Yes, exactly. That's what I'm looking at. That's why in the morning, you guys always see me charting out the Asia session and our London session highs and lows, because those are our draws on liquidity, right? The highs of our previous sessions are going to show us where those liquidity ranges are at, where those liquidity levels are at, right? So that's why I always chart out those kill zones. Like I said this morning, right? We swept Asia low, we swept London low, we grabbed that liquidity, and then we pumped, right? So those previous session ranges are super important. Look at that volatility. Crazy volatility right now. Going into our 10 o'clock hour Pacific. So how do you know buy side, sell side is always the high low before silver bullet? It's not always that specific high, right? But yes, typically, whatever those highs are previous to our silver bullet kill zone, we're looking for those highs to get taken out. Okay, so we could look at like external and internal liquidity, right? So what I mean by that, our external liquidity is going to be like our, I'm just going to remove all these drawings real quick. Our external liquidity is going to be like our long-term highs, right? So our highs from our swing high to swing low, okay? So external would be, you know, like our move here would be an external liquidity level, okay? I have the 1 hour pulled up. This is an external liquidity level because it's on a long-term price range, right? This low to high is a long-term price range. So that's external, okay? So that would be like my draw of liquidity on the day, right? Would be like this high, and then this is another external high up here at these highs, right? So we have that high, and we have liquidity here, okay? So that's external, right? And our external at the lows would be down here. Okay, so do we notice like how it's a price range? It's a long-term price range on the hourly time frame. Okay, so this high to this low would be that long-term price range. We came down and we swept that low, and we formed another external low down here. Okay, so those are those external. So when you hear me say we're going to go target external liquidity, that's the liquidity that's resting at the top of these higher time frame ranges. Our internal liquidity is going to be our liquidity that's in between these ranges, right? So like, let's say this high right here would have been internal liquidity. This high technically is still internal liquidity, but it's right next to that external, right? So that's internal. This is internal at this low, right? And so forth. Like all of these 5-minute, 15-minute ranges are all internal liquidity levels. But ultimately, if we look at a daily time frame, right, we're looking for our external, and we can see our high of the day is that top of that hour candle. That's external liquidity, right? So that's what I wanted to see price target today, and we're seeing it almost get there, right? And that next external liquidity level would be price targeting this high because it's a daily price range, right? That's our daily external liquidity level that I want to see price target. Okay, so that's kind of what I mean by external, internal. Okay, and then you start breaking it down into, you know, you find that external liquidity, and then we start breaking it down into our internal and how we're going to grab these internal levels and then target our external, right? So today I expected us, you know, after seeing that pump being biased to the high side on the day, I expected us to come up and try to grab this external liquidity up here and possibly to grab this one up here. Okay, so that's kind of what I mean by that. And you can see if we're bullish, if we have bullish structure, whatever high we just formed is going to be our draw on liquidity. Okay, so like this one, we have bullish structure all the way up. Now this high is our next draw on liquidity. That's our target. That's where I think price is going to go next. Right, so that's kind of what I mean by that. So yeah, I mean, that's kind of, obviously that's kind of a quicker learning session, but I would definitely advise, I'll post this video if you want to go back and take notes on it and kind of study up on it a little bit. And there's also, if you want to just, look at ICT's Silver Bullet video on YouTube, he has multiple videos, on Silver Bullet. He talks about it. So if you want to really dive into that, I would advise looking at that. But obviously, I'll continue to make educational videos, and I'll continue to post these just so you guys can start learning these concepts and figuring out which ones you like, which ones you want to add into your strategy, add into your arsenal, right, of trading. All right, guys. Well, I'm going to end that session here. We've got prop firm session coming up in about 24 minutes. I'm going to rest my voice here for a second. And we'll come back and we'll trade our prop firm session, and we'll play